Hello, YouTube. Is it time to sell the RIP and the 50 weekly moving average on QQQ? That is this weekend's video. We're also going to talk about some of the biggest mistakes the retail traders still make, including revenge trading and just not being able to admit they're wrong. So with this weekend's video, we're going to give you an update to the bear story. Yes, this video is for the bears. Why? Because we still have our head and shoulders pattern, which we're going to circle back on a little bit later to find out whether or not we have a bull pivot higher, or if this is it, that's enough from these silly bears or bulls, and now we're going to finally go down. Jerome was going to say, whoa, 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 this rally has gone up too much, too fast, and the bears who have been sweating bullets will finally get some sweet, sweet relief. And the things they can look forward to this week from Jerome to be potentially bearish could include that financial conditions have been easing, and this is not what Jerome wants. So I want to really see what he says this week. Instead of trying to pretend like I'm him, I'm just going to see if he blinks, or I'm going to see if he just does what he normally does. I'm going to give you my preview at the end, and we're also going to talk about all of the other big name stocks in a moment. So a Fed rate outlook as well. This is what I want to see what Jerome talks about going into the press conference on Wednesday. Does he talk about how this is mispriced and do we have to fix it? And then as we look here to the psychology on a lot of big names, we're going to look at a couple really fast. We're going to look here to QQQ because it's forming that pattern here, or the W, which is a win for these bulls. And that was at 278 when I shared it, when we had two consecutive daily closes over the 50. Now we're 20 points higher. So with QQQ now finishing off its pattern or a double top here, it could be a cup and handle. And if it is, we're going to move higher. If it isn't, we're going to come down and form the handle and then lose the uptrend. But as this pattern is now pretty much completing, we want to know what happens to Apple, because Apple is the largest stock in the entire market and it is running into earnings. That is usually not what we want to see. It has to deliver something like a VR set to move higher. So as it's hitting resistance here, I'm not sure. Again, I love Apple. Running into earnings is not what I personally like to see. It's ran $20. If it's going to do what the others did, let's look at Netflix, where that W forms. It flags out here, which is the trap the retail traders got sucked into, and then it moves higher. And here at the top now, it is showing signs of exhaustion. Here it did as well, but then it gapped up. We can look here to Tesla. It did kind of the same thing. And whoa, right? Oh my goodness. It did kind of the same thing here. W on Tesla moved higher, right near resistance as well. So that's a big thing for us to look for this next week. Talking about Jerome, talking about the emotions, also something that the bulls want to be mindful of. Sorry, bears, I got to at least give the bulls some credit here. Q1 of this year is currently expecting an expansion of 0.67%, which means the recession would not start until Q2 or in April. Also, one thing that gets me a little bit bullish, I'm sorry going to have to say it, sorry, bears, a little bit bullish, is that we're getting the most negative reading for us going down from our community poll. Thank you to everyone who does it. And also from our stock market forming A. The only times that I have seen this reading higher, and again, Tesla went up 33% this week. I'm even surprised. Looking here to QQQ, the only other times that we had this bearish of a reading, meaning 60+%, was on December 12th, or this week right here, and on October 10th, which is this week right here, about 60% each time. So what happened? Well, that was the low, or it was a higher low. And if we think about the psychology here and what people are desperately looking for, what they really, really want to see is the big, nasty, bearish engulfing candle where they can be like, this is it, this is it, this is it. Well, it ended up being a higher low. And what they failed to see, the mistake they made was that we actually formed lower wicks here, which means there was actually dip buying. And when you get super bearish here and then you flip, this gives you the trap here where you think that you're right. Oh, I think I'm right. And then you can't admit you're wrong. And it actually takes out all those highs. We're now right back to the high of the candle here for the bear started the short. So if this is where they were the most bearish, the second most amount right here, sorry, well, this is where they think we are right now. So if we get that same kind of, let me just get it nice and close here, because I think this would be very helpful for people. If we look here to what could happen, well, that can mean we come all the way back down to support at 281. So let's think about this. If the pattern we're looking at to confirm we're bearish is simple, where we get more of a shot lower, what is it? A true bearish engulfing pattern should have not only the engulfing entire previous bar, it should also close below the previous candle's low. In this case here, back to September, that is 290.87. What is our current weekly low? If that's going to be the bearish engulf candle, it's 281.18. So that is below the 200 MA at 281.8. So if we get a move higher, Jerome Powell or right whatever else. It's the earnings calendar. Something turns us bearish this week, and we get that bearish engulfing candle. We reject off the 50. We close below 281. Man, that's bearish. Don't get it wrong. I'm going to say that's bearish. However, the final thing that would be needed would be an additional candle. One bearish engulfing candle without the continuation lower is not enough. We need to see that continuation lower. So we got the continuation lower here. Then we form the higher lows, and we form the higher highs, and they punch it higher, closing near the high of the week, near the high of the week, at the high of the week, near the high of the week, at the high of the week. That's pretty bullish. They're advancing the chart. So what we would need to see would be a move lower and then a confirmation with another candle that we are actually back below our downtrend. That's what the bears want to see. That's a pretty nice move. If in hindsight we form a head and shoulders here on the weekly, you're going to be like, man, fucking nailed that top. I'm a champ. I did it. Never going to get me down. Or is this going to turn into a cup and handle that I alluded to before? Cup and handle here would be the W, which turns into the cup. And then if we don't break higher and we form that move lower, that's going to be the weekly chart where people are like, I knew all along it was bearish. I knew it. Going to double down, going to triple down. And then, oh my goodness, they get trapped. Or, oh my goodness, they were actually right. And those silly bulls just got trapped again. So to make it really simple for you, if we close below the 50 DMA, we will be below the 50, we'll be below the 200, we'll be back below our downtrend, and we'll also be below our 200 weekly, and we'll also be right around or below our 50 monthly. Oh, it's like that simple? Yes, one more thing. I know you guys have been looking at the head and shoulders here, but that started to get invalidated when resistance turned into support. The red line or resistance on the left side turned into support on the right side. That's where you start to be wrong. If you're enjoying this video too, what I would really appreciate is your thumbs up, please, and thank you. All right, moving forward. If that's what you've been latched onto, again, remember that a larger pattern means more significance. So if I'm currently looking for a W to form, and I'll make it green so it's very color coded for those boomer eyes, what I'll do here is actually show you that the head and shoulders is less time on the chart, which means that if it ultimately does play out, this is a short-term trap. Let's make it nice and, I don't know, blue, so it's easier to stand out here. There we go. This has more time, or the W. So if the W has more time, and what we really want to pay attention to is just whether or not the pattern is still valid. If you're watching this video, it means you have some kind of appreciation for technical analysis. So understanding what technical analysis is also important. What we're looking for is a pattern. Where does this W pattern start to invalidate? Okay, I'll tell you. It starts to invalidate when we stop going up on this uptrend. Why? Because it means that we're not actually forming the right side. This angle of ascent or the move higher is not going to be this one. And I'll show you an example here on SPY on the daily chart. So when we look here to SPY, which broke out first, right? We have our breakout. There's all of our highs. I'll delete the Fibonacci levels here, but you can see they've been acting as very clear areas mathematically for resistance. So if we can punch over 417 or birth a new bull market, oh my goodness, I don't think people will be expecting that. There we go. So if we now zoom in a little bit closer here, I have two green uptrends. First one here being more acute or sharper, or which just means we have less time to decide if we're going to actually pass it. This other less acute angle, or the one that's just sloping slower, means that we have more time. So if we look at the apex here, which is where the two lines meet, it lands on February 14th, or halfway through the month. That'll tell us whether or not we had a bullish reaction to Powell and to earnings and all those net effects, or if retail was just wrong one more time. Oh my goodness, are they wrong again? So if we can't break out right here, right now, I think that we might take more time to ultimately decide. We can violate or break below the green line and confirm we're going lower. But until then, I have to give the bulls a chance. And because S&P's weekly chart looks a lot more bullish by being over the 50 weekly, and we're set to close above our 2018 and 2020 all-time high, 2018, 2020. We're poking over it now. Man, these bulls are like doing pretty good. They got a large W in the making too. Is it going to stall out? I don't know. But as of right now, we've got close near the high, near the high, near the high. That one's still a hammer, but not quite at the high. And then at the high here. Whoa. Yeah, exactly. Whoa. This is like impressive. All right. So as we go forward here, and then we'll look at a few more charts to wrap it up. The most important one's going to be at the very end. Thank you for watching. Apple, looking here at year to date, we have double digit gang. Apple, Google, Amazon up 20, Tesla up 50, Nvidia up 37. Oh my goodness, fear and greed is strong. Those have been incredible gains. So as fear and greed starts getting closer to 70 here, is it time for a humbling? Is it time for another trap? I just told you about how retail traders just can't help themselves. They got to make this work. When you here's a mistake retail traders make. When you need the trade to work, it's probably not going to. If there's an expiry on your money as well, which are options, it's probably not going to work in your favor. 8 out of 10 options expire worthless. So as Jerome Powell is pondering this week, what's he going to ponder? Well, I think if we look back here to this week, good data was good, interpreted good. Bad data was interpreted bad. So green numbers in the past have been bad. Good data is bad. Bad data is good. Core PCE came in line. In line, good. Good is good. Bad is good. Everything is good. Microsoft showed us that. Microsoft had a 3. Looking here to Microsoft just really fast. Microsoft had a 3.3% weekly closeout. It closed over its downtrend, and it looks pretty good. Why? Well, it's worth 1.8 trillion. So going up by 3.3% is about 55 billion or 55 big boys, right? That's a lot. 55 billion. That's right. This little candle here created $55 billion in value. Whoa. And it stopped going down. What if it goes up more? Oh, crap. Right? Oh, that's the second biggest stock in the market. Yep. And its earnings were interpreted bearish, but it went higher anyway. So looking forward to this week, what do we have? Consumer confidence on Tuesday. We close the month out. On Wednesday, we've got ECB conference. We got CPI out of there, ADP non-farm payroll, JOLTS job openings, ISM. Cool. There's like a lot of data this week. Yep. BOE interest rate decision. We've got ECB rate decision. Christine Lagarde speaking. We got our non-farm payroll on Friday, unemployment. So I want to focus in on Wednesday, which is going to be the first calendar day of February. And the Jerome Powell is going to be speaking. And then I want to focus in on Friday because there's 2 data points here. But what I want you to look at here is the, let's go here to QQQ on our 1-month chart and ask yourselves, okay, so if we're looking at this head and shoulders pattern, and we know that I think we're going to close around here somewhere near the high. So if we're near the high and we're going to get a bearish move, well, that could look like this, where back in September, we closed near the high of the candle, we push up, and then we just sell off. The bearish engulfing part is the part that we're looking at here. Technically already a bearish engulfing here if we can't reclaim 297 on a monthly close. So if we're going to get a bearish reaction as the month goes past Jerome on Wednesday into Friday, which will be the 3rd, that'll be how we move down. But on the flip side, how we broke bullish to go to those all-time highs also happened on a monthly chart here from November to December, where we closed near the high after digesting the resistance over a few candles, which forms the shoulder. Then we just move higher. We backtest one more time, and then we overshoot. That's our blow off top right there. So there's both scenarios here. So as we're looking at the calendar here, think about these data points and what they would mean for the market. Jerome, if everything comes in at the estimate. So if everything comes in at the estimate or the forecast, we're going to be at 4.75. Jerome Powell downshifts by 25 basis points, just like the Bank of Canada did. The Bank of England, Europe goes up by 0.5. Okay, ECB goes up by 0.5. Cool. What does that mean? It means the dollar is going to likely want to go down. So now let's look at a different chart here. Let's look at DXY, and let's look at our one-day chart on the left-hand side and our weekly here on the right-hand side. So if we think about this, and we look here to the dollar, well, it's pointing down. So it's right on support here. It's not sure if it wants to leg down. If it does, if the dollar goes down, stocks should go up. So on the daily chart here, we're at a decision point or an inflection. And when we now look to our weekly chart, and we look here, what it shows us is that while we stopped going up by losing the uptrend, and we have like a set of head and shoulders inside of here, where the right shoulders are a lot smaller, but it still gives me like a double head and shoulders here. So falling back below 100, it's hard to get me more excited about the dollar peaking out. And if they're going by 50 and US is going by 25, I think that could be the catalyst. There you go. What Jerome Powell says as well. Again, financial conditions easing, blah, 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 blah. Is it transitory? Well, let's just listen to the man. Zooming in here to Friday, we have non-farm payroll and unemployment rate, which is going to close the week out. So for non-farm payroll, if it comes in at 185, that's below 200. That would be bullish. Unemployment rate going higher, which means people are losing their jobs. That's exactly what Jerome wants, softness in the labor market. So I believe that Jerome has this opportunity to either say financial conditions tightening is not good or take a little bit of a victory lap. We have AMD before Powell, and then we've got Meta on the day of Powell, Amazon, Apple, Google after. We went through those charts already. U.S. financial conditions are starting to ease as of 2 weeks ago. We're also at the falling at the fastest pace since 2009. That's 2023 earnings forecast. So is Jerome Powell going to create the recession? Because as of right now, it doesn't look like we're going to get one. Q1 has expansion, 0.67% as of right now. So if Jerome Powell over tightens, that's the concern. That's why I think that good data has been interpreted good, because it shows resilience. So if we go back here to S&P, it shows resilience, that America's still number one. It's the best and greatest country ever. They can do anything. They can conquer anyone, and it's just a thing to buy. When other markets like the DAX on the year are up by, DAX is up by 8.8. That's Europe. Okay. FXI is up by 17%, I think. Yep. Bitcoin is up by 40 something. Yeah, 40% right here. Tesla's up by 50 on the year. Well, why can't QQQ go up by double digits? Oh, it did. That's right. And S&P right now is up by 6, I think. That's more than 6 months worth of gains in 1 month. So is Jerome Powell going to say, hey, man, I'm the best banker ever, right? Or is he going to say, actually, not so fast? That's really what it comes down to this weekend. So if you've enjoyed the video, I would really appreciate if you could smash a thumbs up. And if you're looking for someone to trade with, you can consider joining me, Justin from YouTube, to see. I would take all of these notes to formulate a plan to try to beat the market. Link in the description. 14-day free trial. If not, I wish you all the best of luck this week, and I look forward to seeing you on the next video. Thank you so much.